cold, and when they're cold, we tend to be warm because you get the high pressure surrounding us. We've been like 50s, which is kind of crazy here in Utah. But anyway, but the warmth certainly has not helped me at all. So, but as far as anyway, we're supposed to go. We had a kind of a camp out for it was like an overnight in a cabin up in Midway, Utah, and we're gonna do some sledding and but there's no snow up there. I mean, which we had that the year of the Olympics. I was at Soldier Hollow in Midway, Utah, where they did the biathlon event, and I worked for the host broadcaster. And anyway, there was no snow leading up to like 2 weeks before maybe it's 3 weeks or so, maybe I can't somewhere in that. It's like 2 or 3 weeks before the Olympics started. There was like no snow up there at all. And all of a sudden, man, it just dumped for a couple weeks. And so by the time I headed up there, yeah, it's probably over about a week and a half. It just dumped snow, and I got up there 2 weeks early before the Olympics started. And the problem was they laid all these cable lines for the TV, and they didn't map them out, and suddenly just that snow just dumped, and we had to go find him. So I spent about 2 weeks out there before the Olympics. Like we're digging up track, we're digging up just feet of snow, trying to find the lines and run new lines because we couldn't find some of them, and it was kind of a disaster. Luckily, it all worked out. So it was something where everything was ready to go for the Olympics. But I will say, I was up on top of one of the buildings, and we had these dishes, and I was over, connecting the dish to the sled. The sled is the snowmobile that's down the last part of the track. And so as the skiers are coming in, they're about to cross the finish line. It kind of swoops around, and then you hit the finish line. Well, the sled is right there, and they got the driver and they've got the cameraman on the back. And so all of a sudden they'll just take off suddenly. So I got to be right there prepared to be able to quickly find it as they begin to move and then just capture it as they go around. Well, one of them, one of the events was a cross country skiing event, and it's equivalent of like a marathon. And this thing lasted for and was going on forever. But there's this guy from South America, and first time his country had ever had anyone in the Winter Olympics, and but he was so far behind. So we were just sitting up there on pallets, and but all of a sudden he just kind of comes out of nowhere, and all of a sudden the producer's like, "Oh, we want the shot," and I scramble to the dish, and I'm trying to connect it with the sled as it's going around, and I couldn't do it. So, and we were basically given feeds for most all other news stations. So, like for example, like NBC had their people there filming, but most of like the technical stuff was done by us. We're international sports broadcasting, but anyway, yeah, it was not good. So his people did not get to see him cross the finish line, unless there was some camera down there on the ground that was close to it that maybe caught a little bit of a glimpse of him crossing over. But it was the producer's fault. Like he literally waited until he was right there, because like he was like 20, 30 minutes behind the pack. But anyway, I'll get rolling here. So let's just get started. Lots of stuff going on. Um, lots of stuff going on. Gordon's like, great place. Yeah. So it's an older cab. It was built like the late 80s, but it's just like you kind of go through Midway and you just go up the hill. But instead, okay, well, I guess maybe finish the point. Instead we went to the crater. So there's a place called Homestead up there, and it's a warm spring that comes up 2 miles below the surface. By the time it's the surface, it's 95 degrees. And for a long time, over however many years, it had built this dome, which is like calcium and mineral deposits. But in the 1860s, the person that owned that property drilled a hole in the side of it, and it kind of fishes out to warm some of these other pools that they had created. And but anyway, so we're in there. So we decided to go to the crater instead. So we went swimming instead of tubing or sledding. There's a really nice tubing hill up there too. That's really nice at the Olympic Park. All right, let's get rolling here. So what are we going to talk about today? Not going to talk about my voice. We're going to talk about Tesla for puts the calls, Oracle, the doldrums remain, and MO as it getting defensive here. So there's a three big prints, one for Friday, then we got Oracle and MO, and then we'll take a look at Ghost Print Surveillance Console here and identify stuff that might be in a good position, right, for opportunities today. Um, So this is the great thing about the console generally. And let me just bring it up here. Is that it helps you kind of set the tone, right? When I say set the tone, it's just a matter of a lot of times we have a tendency to kind of get ahead of ourselves or just be really biased. We can become entrenched, right? We just basically say, look, my sentiment is this, and you're not going to change it. But the reality is like we're not oftentimes right all the time, right? And when we're talking about trading, the flows and news, the news cycle changes dramatically. Paula mentions the robotaxi. And so it's one of those things that we have to be keen on new developments that occur. And we're not necessarily, as individual traders, we don't have the access to the information that large funds have, right? The timing and access that they have. We just don't have it. We can't replicate it. So we're using the options market as an ability to identify where the money or so-called smart money is going. But also it's a matter of also creating gamma and potential short squeezes and other follow-up activity. But the idea is that as stuff is happening, we have a chance to be able to moderate and make decisions. And the whole point of making decisions, you're hopefully able to make it before the move happens. Okay. So for example, I'm going to bring up, so we're on December 12th here. And you notice here, this is just, I'll just, sort by volume, press again. The top one on the list here is Tesla. Now, this is being pre-screened a little bit, right? So I'm not just giving you everything in the list here. We are getting stuff at the bid and some stuff at the ask. This is not going to be the highest volume option out there. But remember, we're looking for very specific criteria. We don't want all of the noise that if I'm just looking at volume, I don't want to sit there and stare at stuff that's meaningless or pointless or doesn't create or give me any sort of indication. And so what we're looking for specifically here is very important. We're looking for opening activity, right? We're looking for opening activity. And this is important because who cares if somebody's closing a trade out at 100,000 contracts? And yet people frequently will look at that stuff. We also want to identify stuff that's traded quickly or in large size, meaning that we get a big print, thousands of contracts, or maybe it's smaller amounts of contracts but traded quickly. So just sent out all at the same time. It's called a sweep. So we want to identify large prints. We want to identify sweeps. Those large prints I call block trades. But guess what? Our block trade setting does pick up sweeps as well. And so sometimes, and I got an email on Friday, from someone who has like a service where somebody's sending them stuff on the options market. He's also a Ghost Prince member as well. But one was like way out in 2027. Well, so we talk about the effect on a stock, it's going to be relatively minimal. But the second point is that the other one, it did not fill quickly, it did not trade quickly or in large size. And so at those times, do we really want to focus on those kinds of trades? So as we look at Tesla, we can see right away that this is a block trade, right? Why? Well, number one, we have a threshold here for volors 2,000 contracts. So if this gets north of 2,000 contracts, we can get an alert if also we're greater than the open interest. So notice the difference here between volume and open interest on Tesla on Friday. There's about a 35,000 contract difference, right? So I know that there's a block trade in here that's at least 35,000 contracts, right? And so when I go over to the location, I can bring up and see the time and sales. And this is rather unique. You don't normally see option time and sales anywhere except for Thinkorswim. And you also have historical time and sales, which you don't have in Thinkorswim. And I got some cool stuff we're working on for this that we don't have yet. Okay. It takes time to develop. But notice on Friday, okay? Notice on Friday, there was at least a third. So we said 35,000 or greater. It was a 39,841 contract trade. And notice this is highlighted in purple. Okay. This is what triggered the alert. Okay. And so I know the composition of that trade by looking right here. And I know it was filled above the ask. Okay. Now, if something's getting filled, and we're getting filled above the ask, what does that tell you? So if you have an order that's filled and you're getting filled above the ask, what does that tell you? So when you look at stuff, right? So let me just bring it up here. So if we look at, I got SMA chip, we'll just bring up a option chain, right? So when I look at this option right here, I can see the bid is 745. I can see the ask is 790. If somebody's willing to pay more than 790, what does that tell you about their trade? They're confident they want in, yeah. And think about it this way, it's also probably what? It's probably a market order, right? I mean, they wanted to get in. And this occurred about 1:30 p.m. Eastern. Okay. This occurred at 1:30 p.m. Eastern. So we're talking about a bearish trade in Tesla earlier in the session, but was way out of the money, right? It wasn't really going to impact the price a whole lot, right? But then all of a sudden, we get a big trade in Tesla. They bought it above the ask. And that tells you, look, they're basically buying at a market and they paid more than what the market price was, right? Now, granted, they're getting filled 39,000 contracts worth, right? So that's a big fill. Now, this ultimately ended up trading to 78,000, and we traded 140,000 contracts. Now, we can't look back today and see the statistics there. One of the next steps we're trying to accomplish here with the location is being able to analyze between 78 and 140 and being able to pick up on bigger trades and disposition those. Okay. And so it looks like a close, but no, see, look, this is why, right? So notice the volume alert here. 78,000 contracts is greater than 43. That's right. So volume is greater than open interest, right? So this is a huge thing we got to understand here, right? That volume is greater than open interest. Is it a short call? Do we know for absolutely certain that that was not just a close? Well, look, I mean, no, we don't, because technically the open interest was 43,000. Is it possible they traded 39K to close out 43 and that the remainder, because we had already traded at that point, we'd already traded 39K, right? So we traded 39K, then we got the 39K print. Past diagonal, I don't know why would you assume it's a diagonal? You really don't see diagonals done that much. Like you see verticals, you see butterflies, a little bit. Sometimes a calendar. Really, it's just straight calls and puts and verticals is mostly what you see when you're talking about sizable trades. So there is a small probability that the 39K print that we're seeing here is a closing trade. But because we had 140,000 trade and 43,000 open interest, and in that we got a 39K trade, it's highly, highly likely that was an opening trade. Now, what could you do to verify that? All right, let me give you some tools to be able to do that. So if I'm looking at Tesla, and we'll go back to that one. So, it was the December. So it's December this week, 500 calls, so short dated, right? A little bit out of the money. Yeah, the open interest was not that much, right? So we got 107,000. So think about that, right? So we had of the 140,000 contracts traded, okay, we had 39,000 open interest. So we started off with 39,000. Oh, sorry, 40 was it 43,000 open interest. We're now 107,000. Okay. So we saw the open interest go from 43 to 107. Open interest increased by over 60,000 contracts. Again, most of that activity on Friday was opening. How do I know that? Well, because look, the open interest is updated at the end of the day. The volume is updated throughout the course of the day. And so as volume trades, some of it's opening and some of it's closing. So some of that volume on Friday was day trading, right? And probably a lot of that was day trading. Well, here's the thing though. We saw a 39,000 contract trade, right? But out of that 140,000 contracts that were traded on Friday, we know that there is an aspect of day trading there where it's open and closed. So was it 80,000 day traded and 60,000 opened? Well, that's what it ended up being, right? Because we had day trades that went on. Was the 39,000 closed? But again, looking at here, you would not assume that. Now, or the 43,000 was existing. The next step we could do is actually look at the option contract here on the chart. So if I go to Thinkorswim charts and click on right here, for example, I can look back in the on the daily chart and say, okay, how many days have we had where volume is over 39,000 for that contract? Well, back here, I guess way back on October 3rd, we did, right? We did have that amount, but did it add that much to the open interest? Not really. 26,000 to about 38,000 contracts in open interest right here. So it's not like we went from nothing and jumped 39K, right? So again, there's probably a very, very small probability that that is a closing trade. Okay. But I do like the scrutiny, right? I do like the idea of saying, man, that's a lot of open interest. And that one bill of 39,000 contracts is less than 43. Does that make sense though? So again, very small probability that was a closing trade. Again, the build up in open interest, the fact that we never saw a big jump in a volume or open interest until yesterday, just tells us something about tells us about the disposition here. So we pretty much know this is opening activity. Now, when we see this kind of big jump here, right? Are we assuming that somebody has insider information? Some people want to make it that kind of threshold. But the reality is no, we don't want to assume that anybody has insider information. And I get it, the propaganda, people want to say, oh yeah, it's somebody knows something because they want to infer that this is increasing their probabilities of success. So, do large option trades significantly increase your probabilities? I would say no. What does it actually do? I mean, yeah, it does indicate flow, but when I say a significant increase, if you've got a 50-50, it's not going to make it 90%. Okay. It is indicative of flow. I mean, Batman. It is indicative of money flow, right? We talked about volume preceding price. So yeah, when you see this, that's a flow indication. I do believe it does increase your probabilities a little bit, but over earnings, probably not. But what does it really do? So I'm going to bring up Tesla here. So I'm gonna go TSLA, and we're gonna look at all of it. There was 79 different option trades. Yes, this was the biggest, but it wasn't the only big one, right? But we gotta kind of pare this back here. So I want to look at stuff that's being bought. So I'm gonna take this stuff off. We're just looking at stuff that was bought on Friday on Tesla. Okay, Batman made 70% this morning at Tesla's jump. Did you use the option activity on Friday? There was a couple people that did actually. That are in Ghost Prince commented. So the point is we look at this scenario. So as we look at this, we can say, okay, 73,000 contracts. Now, volume to OI, this is actually kind of significant. So when I see this, I get a little bit concerned, right? 26,238, 237. So this just tells me there wasn't a really large trade in there, right? We kind of want to identify blocks and sweeps. So if I see a volume to OI ratio when that triggers, I'm not super excited about it. It's possible there could have been something that occurred here between 26 and 68. And we're looking at solutions to be able to provide insight into that through the location bar and be able to click on it. All right. But we're not there yet. But the thing about this is this does not excite me because we jumped over 26,237 by one. So I don't know how many contracts here. We could look here, but that doesn't excite me. So what I like to do is I want to look at volume to OI ratio. I want to look at least 1.2. So I want to get out the riffraff, right? And I'm going to sort by vol alert. And so what you'll notice, there's a call here, 22,000 contracts that scaled up to 54. That's the 440 calls that were being bought. Notice here, there's also 20,000 puts that were bought at 250. And if I click on this, and again, I want to see what kind of size was here. So I'll do 1,000. And you'll notice someone bought 20,000 put contracts for 12 cents. Okay. We look right here. This is the call option, right? At 440. Was there any large print here? And what was the price? So there was not a large block trade on Tesla at that call. So if I look at the bigger block trades here, I'm looking at this one and I'm looking at that one. So someone bought 39,000 contracts here. They bought 20,000 contracts there. Now let's take a look at the difference in price. So if I get in here, I say, okay, well, let's look at the location. Let's break it down. Go back. We'll kind of filter and bring in that trade. Oops, whatever. Scroll. Let me see if I can find it here. 15. So right there, 39,000 contracts. It was filled at a buck 36. Okay. So which one is a higher notional value? So if we're talking notional value, which one has a higher notional value? 12 cents, right? Notional value, right? Which had a higher, well, this one does. So again, I'm looking right here. They bought a buck 36, 39,000 contracts. The size of that trade is a lot bigger than the 250. All right. But that doesn't mean everything, but it does mean something. Because what that means is that the proximity of 500 is a lot closer than 250. So what we want to identify with this kind of activity is, and we talked about this on Friday, we want to kind of understand the impact of the option trade on the stock price. And this is called gamma, right? Gamma. So when I talk about $500 here, $500 versus 250, $500 is significantly closer than 250. The delta at the 500 option is significantly greater than the 250. This option down here is basically a zero delta, right? This is what we looked at in the morning, right? This popped up in the afternoon just before the close. So we talked about the muted impact here, but Ghost Prince, we did close our TSLL trade on Friday, and I did key off this, but also recognizing that TSLL introduced a new contract expiration for January, and suddenly for TSLL, we were in the odd contract here, and liquidity dries up fast in these odd contracts. These were like, oh, we had tens of thousands here before, right? Where it's just whittling down here and the spreads are widening. So I wanted to get out anyway. Seeing that, again, it just helped me to say, look, you just got to get out. Okay. So if we go back to Tesla here, again, the 250 and the 500, the 500 has significantly greater impact. So what does that mean? Well, if we're looking on Friday afternoon, just before the close, and you're looking at that activity in Tesla, it could warrant a new trade, right? It could warrant a new trade. But what's our target price right now? So based on Friday's activity, we're looking at a $500 price target by 12/19. Is that worth trading? So if we're saying, look, we're looking for a $500 price target here, yes, we're at 4%. But notice something, we are breaking out today, right? We're breaking some resistance. Is this worth a trade if you have a $500 target by Friday? Realizing also if we break 500, this can create additional pressure to the upside because of the gamma squeeze. Because does that have a lot of a lot of open interest for Friday? So if we look at the various option strike prices here, we got over 100,000 contracts there, right? I mean, that's pretty dang big, relatively speaking, right? And we know this is mostly bought. So we know that this is mostly bought in here, right? So this is a significant level. If we go to and through 500, this could create a big upside move, right? Or help continue pressure to the upside. And so we're seeing that a little bit of a gamma squeeze today, and we could see a further squeeze if we go to and through 500. So again, how would you trade Tesla right now? I mean, that's ultimately, we want to translate this kind of print from Friday, even though we're seeing it after the fact today. I kind of checked out on Friday. I was exhausted. I had to go on a camp out with a bunch of 12 and 13-year-olds. Camp out. We slept indoors, but it was like 50 degrees up there. We're in good weather here. Not great because we need some snow. Now, how can you trade this, right? These are 250 wide strikes. I mean, could you squeeze something in here going to 500? Absolutely could. Could I say, okay, I'm going to go 30 delta, 487.50, 490? But let's look at the volatility here. So 487, 490, I'm buying 40.57 and I'm selling 57. There's no edge in this, but it's not bad, right? You're paying about 90 cents, but you need this thing to get above 490 by Friday. Is that out of the realm of possibility? I mean, just look at this, right? 490 is basically right there. I needed to get north of 490 by Friday, right? And again, we get north of 490. you're not going to get, you're not, the max loss in this is 90 cents. So if I go max loss equals 0.90 or $90 a contract, the max gain in this equals what? It's $2.50 minus 90, which is $1.60, right? You're not going to get $1.60 if we get north of 490. Okay. But what could you hold out for? Well, you're paying 90, you could go 1.7. What that means is just take 90. All right, we should be back now, I think. Are we back? Let me know if we're back. All right, good. All right. Yeah, so I updated my iPhone and I'm using a Mac, but all of a sudden the microphone connected to my iPhone and so I had to, and it wouldn't let me go back to my I have a Rodecaster Pro 2 and wouldn't let me go back to it. So anyway, we're good. All right. Good. So the point is just shoot for $1.50. Now, what if you don't like a week? This is we're walking a tightrope here. But even the noise of the market could push you up here, right? Towards 500, right? And through 500. That's not a big move. But it's also a week, right? We only have 4 days remaining. We could slip down here. What could you also do? You could just go out more in time, right? You could go out here 32 days, give yourself a little bit more time. It's not going to get to the 70% as fast. But if you got your 40 delta buy vertical, it's a $5 spread. It costs you $1.63. So what do? Again, look for 70%, right? 1.7 times 1.60 equals, you're looking to close it for about 270. All right. Looking to close it for about 270, but you're risking $165. What size of account do you need to risk $165? Take 165 divided by 0.01. Yeah, you need about 15 grand, right? $15,000. You could take this trade. If you're willing to risk 2%, you can maybe do about 7,500 bucks. Okay. Well, what if you don't have $7,500? This is why I use TSLL. Okay. TSLL allows me to what? It allows me to get in here and you're talking a lower price stock that you can still do spreads on because the volatility is high enough. And so if we look out here 32 days out, I can buy the 24 and sell this 26 in here. Same trade as we did on Tesla. It's just at a lower price. So it costs you 56 cents. You could do this if you have $2,000. You want to risk about 2% of your account, right? It's a little more than that, closer to 3%. But that's 56 cents there. So if you have a small account, use TSL. You got a reasonable account, you're willing to go a week.
all right, okay, go Tesla, go the week. If you want to go longer, you got to need about 7,500 to 15,000. And but you could do the 40 delta out there at the higher strike price. So those are all possibilities and ways of trading Tesla bullishly. Yeah, I just said on Friday morning, hey, bearish print, we're closing TSLL. Well, again, remember, stuff changes, right? Dynamics change. Now, here's the question though: are you wanting to have bullish positions this week? We got a Bank of Japan statement coming up on the 19th here. Okay, so we're gonna get on. We're gonna get it Thursday night, and it could really move the market. So you got to decide how much risk you want to take on. Okay, got to decide how much. Doesn't sound good, Batman. I know my voice doesn't sound good at all, but anyway. But again, this would be an interesting trade for this week. Tesla's outperformance today. Notice how the market's fading though, right? We're continuing to slip here, and energy's down 1.25%, which I absolutely love. We have a spread that's expiring this week, and I needed to get down here towards 44. I just kind of ripped and kind of went away from us. We're at 50+% gain here, and it went away from us. Is circling back around here today. If I can get out for break even day, I'm out. I'll get out of break even. We get out for break even day. If not, I'll probably give it another day to see if we can drop here. But if we can get close to break even, we'll just take a loss on it on XLE. All right, let's get back to the drawing board here. So let's take a look at Oracle. The doldrums remain. So if we notice the leadership today, right? Where's the leadership? Not. It's not in technology. So we talked about last week several times, going back to this kind of point right here. That look, I mean, things are turning, right? From an option activity standpoint, things in the last week or so have really kind of turned more bearish on stuff like what? Like Oracle, for example. There was a big trade the day before the earnings right there, for example, a big put trade at 190 down here. Okay. And so, yeah, AVGO on Thursday, right? Another big trade coming on Thursday. It's down another, what, 4.5% today. What does this tell us about technology? Okay. So we talked about on Friday, we're talking about infrastructure, right? Infrastructure is a major issue right now. Now, is it affecting NVIDIA yet? NVIDIA was kind of near support. On Friday, we're kind of up a little bit today. We haven't seen it entirely flow downstream. We're talking about infrastructure and specifically also data centers, right? So the problem is this, is that the data center spend, we may see some illiquidity there, right? The inability to continue to borrow billions of dollars to build data centers that you can't power or otherwise you may not be able to finance it, right? So that's something that's going on right now. These are real issues that are affecting technology. And I'm hoping, and we talked about SOXS on Friday as a potential opportunity here, right? That daily compounding, man, if we just start to break away in NVIDIA, this thing could really take off, okay? So we talked about that trade on Friday. But let's circle back to Oracle again. Blake and I did a special way back here when they announced the data center. They're not getting out of software, but adding to from just software. They're going from a software company that has fantastic margins. Okay. They're going from a software company to what? To data centers, right? So we're talking about what's called a vertical integration. Does vertical integrations work or do they work? Vertical mergers don't work. Do vertical integrations work? And we're seeing Tesla, for example, buck that a little bit. But the reality is that if I take a shortcut on software and I give data centers cheaper software, my margins get hit here, right? If I say, okay, we're gonna use our software in the data centers, but the data centers are gonna have to pay the software rate or higher rate to make the software look better. At the end of the day, vertical mergers don't work. Vertical integration doesn't work, right? And so Oracle found out that, look, I mean, borrowing tens of billions of dollars to build data centers, there's no prospect currently to be able to power or, power is a problem. Okay. And so the problem is, look, we're seeing this kind of go off here, right? And we saw the earnings cut. We saw the big print there, big drop there. Again, did that print tell us the stock was going to go down? No, it didn't. even though it was sizable, it still did not guarantee the stock was going to go down. What it did do is it helped you identify the directional gamma, right? So the point is on the earnings announcement here, the gamma was to the downside. It wasn't to the upside. So if we get a surprise to the upside, it's probably a relatively smaller move. Maybe there's some shorts built in here and the shorts get squeezed and maybe help propel a little bit more. But the gamma was the downside. So that's what we know, right? And so again, we're seeing right now is we're starting to see those that are not in a fantastic position. We have Oracle and we have Broadcom that did not have fantastic reports. They're getting hammered here right now, right? And so, and the options market is providing the downside gamma. So let's go back to the console here. Let's look at Broadcom. So I'm going to change this summary. We're going to go reset all filters and we'll go block trade. Oh, it's only 12th. We got to go to today. Okay. So we're on block trade setting here. Click it again. All right. So what do we got here? Notice Oracle's on the list here. So again, I mean, there's 622 big option trades bought and sold. Those are pre-screened. Imagine when you're using other services out there and you're just getting like the full fire hose every single day, right? We can quickly just narrow it down to 22. Okay. And so, and I know there's at least a 1,000 contract block trade in here. That's my minimum definition of a block trade is 1,000 contracts. And I know that because because that's the setting, right? The minimum is 3,000, the OI ratio is 2. And so bottom line is I know that then this is going to be at least what? At least 1,000 contracts. Now I know right now it's at least I know it's at least 8,000 contracts. Okay. But I can click over here on location. I can see the time and sales for today, and I can put in a filter. Let's go 100. Probably not a lot over 100 here, and I can see what I can see that this was a 10,000 contract trade. Oh, 9,998. Right, it might be a 2 contract trade, but 10,000 contracts bought in one trade. Right. So this tells me what now? What's the proximity? What was the price? What's the delta? I mean, if I go back here, we look at the price, it's a representation of the delta, right? But notice here they bought it for $1.68. So let's look at the notional value here. So we've got 9,998 times 1.68 equals times 100. This is a $1.7 million, $1.67 million trade. So again, is that a retail trader? No. These are large institutions. What's the motivation for someone buying 10,000 contracts in one trade? What do you think? What's the motivation there? Joe, you probably have to call up TSLL. So they're making you jump through hoops. And I was on chat with him and I said, hey, I was on chat with him. I was like, do you realize I had to do this several times? I'm getting tired of it. And there's a lot of people getting tired of it. The guy ended chat with me. I was like, dude, come on. Hedge. Yeah, this is likely a hedge. So again, never assume that somebody knows something, right? Because that's going to bias you. Just assume that they're hedging. That's the least common denominator, but it doesn't matter though. This is what we have to understand is that we want to infer motivation. We don't care what the motivation is, right? So motivation, don't worry about that, right? Don't worry about motivation. Why did they do it? It doesn't actually matter. What we do know though is that this level does become significant. What level is it? 160, 10,000 contracts bought. Well, let's look at its relative size. So we know it's a $1.7 million trade, but how does that really compare to its current open interest? 10,000 contracts. So if I come in here and I see, well, what is the average today, right? 167,000 contracts average, right? Most of it between the market, a little more probably been sold today than being bought. Again, we're about average volume. So let's take a look. So this is I forgot the expiration already. This is the what expiration? This is the January 9th, 160. So let's go down here to January 9th, right? 160 put right here. Now look at the open interest, right? That we currently have here. This is like in the hundreds, right? Not much impact there, right? Hundreds. Guess what? We just had 10th. We're gonna see this open interest swell to like 10K tomorrow, right? So this level does become significant relative to these other strike prices here, doesn't it? The ability of the market maker to eliminate their risk here is going to be relatively minimal, because what does the market maker have to do? And let's just think about this for a second, right? Someone bought 10K contracts, right? Plus 10K. Who sold it to him? The market maker. They're minus 10K at this strike price and this expiration. How are they going to offload this 10K contracts? Just look here. They're not going to be able to do it, right? Are they going to be able to find 10,000 people to sell those calls so they can offload it to them? No. This is going to remain in here, right? They're not going to be able to remove it, so they're going to have to hedge it. If somebody's buying puts and they're selling puts is bullish. Well, guess what? They have to hedge. How do you hedge if you're short puts? Think about it for a second. Market maker just sold 10,000 contracts of put options, right? How do you hedge long delta using the stock? So now they sold puts, right? They have a positive delta here. How do they hedge away their risk? And currently it's an 11 delta. But how do they hedge away their positive delta? Using the stock. Anyone know? If you buy stock, you're adding positive delta. So we can't buy stock to reduce positive delta. How do I reduce it? I got to sell stock. I got to short stock. Okay? Because they already have a positive delta. Why? Because those that bought the puts here, they have a negative delta. Market maker has a positive delta. How do I reduce this? I got to short Oracle stock. Okay? So this is what we call the gamma squeeze, right? It's the effect on the market maker having to hedge their position. And right now, it's an 11 delta. All right, well, let's take a look at the timing of this. Okay, so we go back here. So, well, when did this actually happen? So go back to Oracle and we'll click on this and we'll see, okay, when did this trade happen today? It happened at 9:53 Eastern time. Okay, now I can click on here and I can see an Oracle chart and I can go back to 9:53 Eastern time and see, okay, was there an effect, right? I mean, sometimes, stuff's just going on. I gotta make sure we're kind of the same time zone here, but can I see volume increase? So notice right here, that's 9:52, 9:53 right here, right? So we're seeing like some heavier volume as that's kind of getting filled in here. We already saw a kind of precipitous drop in selling overnight. So did it have an immediate effect? No, right? It didn't. But I can say, look, well, yeah, I mean, this has potential to affect it. Well, what's the potential? Well, notice that the delta right now is 11. Well, what happens if Oracle's price goes from 185 and drops to 160? What's the delta of this option going to be at 160? It's going to be negative 0.5, right? Because that's what this is right here. So we're going to go from an 11 delta to 50. The market maker is going to have to hedge their exposure to this option by 4x, right? So if we see continued weakness, it's going to continue to pressure the stock and drive it towards 160. And then if that starts to go in the money, well, guess what? That delta is going to start to go north of 50 towards 1, especially as we approach expiration. So this is the gamma squeeze, right? So remember is that we have structural selling interest. This is not just the ethereal stuff. Okay? This is not just ethereal stuff. This is not just like out there floating. It's just like, oh, well, someone bought it, but it has no, this has real impact on the share price. Okay? Well, so if the market maker has to short Oracle, which direction is the pressure going to be? So if they've got a short Oracle today at 150, 85, 40, what's the directional pressure? Up for a short or down for a short? So right now they have to short stock to hedge that 11 delta, right? Down, right? Yeah. So as the price goes down, what's the delta doing? The delta goes up. Well, technically more negative. The delta becomes more negative. So the higher the delta gets, the more stock they have to short, right? The higher every income, I short more. Goes down. I got to short some more. right? So this is called the gamma squeeze. So the point being is that this does create, now we do have to see the price sell, right? The price does have to move, which we're getting here, right? And so that's an important note to make here is that if the price goes up, what's the delta going to do? The delta is going to go down. Okay. The delta is going to go down. It's going to have less impact. So we do have to have some degree of movement towards that 160 strike to help pressure it, right? And drive it. And so again, there is that aspect of it, right? But if we do, this creates increasingly more downside pressure. That's why we call it a gamma squeeze. Okay, we start to see it moving towards today's low. We start to break the start to push towards 160. All of a sudden, the pressure continues to be increasingly more applied. So market has to hedge more shares. And again, that just creates more of an environment where the gamma is to the downside. Okay, the bigger move is to the downside. Okay. All right. So how to trade Oracle here. Now, again, this is a higher price stock. It's got $5 spreads. Again, but you can do the same scenario, right? You can go out in time and say, look, I'm expecting the stock to fall. I don't have to play the 160 strike. Out 32 days, that 160 lands at 13 delta. Now, very low probability of it getting there. It might be better than that because we're kind of saying there's gamma pressure, but go something a little higher. Okay, I'll do the 180, 175. Buy deep, just buy vertical. Buy $5 wide, it's going to cost you $1.83. Where do you close it out? You close it out for 70% gain, right? So $1.83 times what? 1.83 times 1.7. You just want to close that for $3.11. Okay. That's all you're looking for. Now, is there there's a little bit of benefit by skew, but not a lot. There's not a lot of edge in here, but we do have the potential gamma for the expiration. But again, we're looking for 311 on that spread. Any other way you could trade? Well, again, Oracle, what industries is a part? You could see if SOXS has Oracle a part of it. Okay. Again, is it a semiconductor stock now? But as far as trading it, that'd be a reasonable way to do it. Now, it's volatility higher here in the short term. 4 days out, I mean, you can buy something out here, sell something there. And I'm gonna get that a whole lot there. But again, these are, sorry, I'm going the wrong one here. You can easily trade because of the volatility structure. You can buy verticals. Could you buy an in-out spread? Sure. The only difference with the in-out spread is that we're down a bit. You might see a bounce. And so I like to go with the higher reward type plays. So I don't have to be right quite as often. Okay. Someone bought 1.1 million of Disney. 1.1 million of what? Here's the thing though. If somebody buys, so what is let's talk about it for just a moment. Because this is an important distinction. Years ago, I helped someone write a book on dark pools, and I got published and whatever. But I was kind of the ghostwriter. She provided most of the content. I provided a lot of filter, kind of reorganize it to make it make sense more. But again, what does this tell us? This is a big difference between option activity and stock activity. So is there a distinction between buying stock at 110.91 or buying a call option? I don't think so, Keisho. That's why I mentioned SOXS. You could look at SMH and look at the top holdings. So just follow SMH, see if Oracle's a part of that. Because again, this is generally part of it. So SMH is more influenced by NVIDIA, but if Oracle keeps going down, it's probably going to pressure NVIDIA. Okay. But what's the difference between looking at a stock trade versus an option trade? And it doesn't really matter. And I do think that they bring in dark pools here. This is probably a stock trade though. This is probably during normal market hours. But there's a big difference between what we can get from this and what we can get from option trades. Stock has no strike, right? But more than that. But that is an important point there. This doesn't have a strike price. With option activity, you get a symbol, direction, target, and time frame. Can you derive any direction from this? So the big question is this: can you derive a directional bias from this? Daniel's saying yes. Well, I'll talk about it just here. Anyone else? Anyone want to take that from Daniel? CO says yes long. Okay, here's the problem with that though, right? If you're buying 1.1 million shares, what does that require? So this is, again, even applying dark pools. So still a very, very important consideration. Well, it's not too many scenarios. This is actually more base, right? This is way more base than an option trade. Someone has to sell it, right? So let's take a look here. We'll see if there is a if there's a trade for 1.1 million today. We'll go 1 day, 1 minute. We see 1.1 million. So notice here, there is not a single. So notice our 300. No, we did have 300 million here. When did that occur? 10-11. So 10-11 right there. Okay. So notice what happened here, right? Where did that fill? 110.91. So filled right about somewhere in here. Okay. Remember, somebody had to sell it. Okay. Yeah. Could it be someone closing a short? Could be, right? They could be closing a short out. We don't necessarily know that, right? But the point is this, is that when we look at this kind of activity, all you get is this. You just get a level. Okay. That's all you can take away from that. You can't look at buy. You can't look at sell. Because if somebody's buying 1.1 million shares, somebody has to sell 1.1 million. Somebody has to be willing to part with 1.1 million shares in one trade. Okay. So you had to have a willing seller and a willing buyer. So ultimately, all you can really take away from this is the actual level, the price level that it creates. And that's 110.91. So just remember that. And so, for example, if you look at my, we can see kind of the volume today versus, notice how that just is kind of just, that's odd. Let me see. One day, one. Oh, I thought it was like, sorry. I misinterpreted. This is 300,000. So, okay, no, sorry. Let's take a step back. I was going this direction. I saw 300. I was like, I thought it said millions right here. So think about it. So this filled 1.1 million. That minute that it filled, 10-11, right there, that only shows 150,000 contracts. No, someone has to sell. But notice this, right? This is 10-11 here, right? We had a bar back here around 300,000 contracts. So a bar here at 150,000 contracts. Okay. So yes, if you buy, somebody has to sell, right? If you sell, you have to borrow the shares, right? So you have to get those shares from somebody, don't you? So, but notice here, there's not a single that's over 1 million, right? They're all less than 1 million. So what does this mean about this trade? So that's what I mentioned right at the beginning. So you got 100, 200, 300,000 contracts there. There's not a 1 million threshold here at all. We've not had a single 1 minute bar this entire day that was over 1.1 million shares. Where's this coming from? And so when I see this, I'm again, Charles Schwab used to have dark pool data in their block trade. And their old their legacy system, Street Smartest. They used to have a block trade search for stock, and it did include dark pool data. So my assumption, this is dark pools. What is dark pool? It's a private exchange. What happens in dark pool? It's a private exchange where they trade big blocks like this, right? So someone in there bought 1 million contracts in the dark pools. We're probably seeing that filter out. When did they do it? They could have done it over 24 hours ago, right? So if we back it out here, we look at a 1 day, 1 minute chart. They could have done that yesterday. What's a little 110, 111.15? Yeah, it could have been on the 11th, right? Thursday. We're just barely getting that today. But again, they don't have to report for 24 hours. So the point is that, this did not occur today, right? It did not occur in today's, look again, no volume bar above 1 million. So that one right there was what? Oh, actually, it was 1.5 million. Why is this suddenly changed? It was yesterday. Right. So after hours right there, 1.5 million shares traded there. So my point is, just remember though, you need a willing borrower and a willing seller. So you always need somebody here that's taking the other side of the trade. And so the levels, what's the say? This is the takeaway right there. It's 110.91. So when you back this out to a daily chart, for example, you know something here, right? That 110.91 is going to be significant. Where is that? It's right about right there. Now, I don't really care too much about individual stocks like this. I'll underline. I know that this level right there is going to be significant, right? That if you're below it, it's going to act as resistance. If you're above it, it's going to act as support. I do this a lot with SPY. So all of these back here are past prints. I've not been watching it recently as much, but all these back here are past prints just like that. We had a million shares plus on the SPY. Okay. Well, closing calls are getting whacked on into I can't infer anything about it too in terms of, but again, is today an unexpected move in an INTU? The answer is no, right? This happens all the time. So the question is, how much time do you have? What strike price do you have? What was your exit plan? Because this should have been anticipated. You had an exact a day like that yesterday or Friday, day like that here, day like that here. This happens all the time, right? Is this an indication of resistance? Sure it is, right? And we close below that low right there and we form a lower high. Yeah, we're experiencing resistance today. Yeah. So again, if you're playing swing trading, yeah, I mean, I'm looking here. This probably would have been the target, right? So you probably should have sold them to strength there at 677. Higher high. Yeah. We're still in the muck, right? So I mean, is this a higher high here? Slightly. This is a lower high though. That's a lower. This is lower high, higher high, lower high. I would still call this pretty equal. But I would look at this area and say, wow, there's a lot of resistance here at 680. Okay. I get it. No, it's not a bad trade though, right? So bad trade infers that, we did something wrong, right? We broke our rules. But that's not exactly what this means, right? So again, breaking your rules, did you break your rules? Then it's a bad trade. If it's an unprofitable trade, those are to be expected. So anyway, let's look at MO. Because I think this one's kind of interesting. So MO today, you'll find it, it should be on the block trade. So let's do this where I can't find it after I reset filters and type in MO. Yeah, this one didn't quite meet the block trade threshold. Blake in here. So notice there's 20,000 contracts traded today. We got the alert at 2,100, which was north of the open interest. So this one's a little bit more opaque, but this is a good one. When I add the feature to be able to analyze between 2,000 and 20,000, we're going to get it here. So if I go here and I just look for 100 plus, right? How many 100 pluses do we have? Well, this is when we got the trigger of 550 contracts trade at the same time. All right. Is that huge? No, it's not. It's not huge. And so again, is there a big block trade? No, but I can do a real simple back of the napkin math here and go to MO on TOS, and I can look at something called option statistics. Earlier today, this was at 51%. That was a lot lower. We are seeing 5 times the average volume today. And again, we're up to 20,000 contracts. So when I come in here, I look at this, I'm saying, well, when I'm looking at the DS19 expiration, and we want to look at the 61 strike price, this is virtually all 61 in here. And as I just do some eyeball tests, again, mostly today, and I can sort by time over here. Okay. So we're basically, okay, when did all this kind of come in? Right here, we had a tranche coming in all at the same time. That's a sweep, right? Here we have 13 cents. It's probably this prop made part of the same, but it's a different price in here. This is a sweep. They're coming and buying at 14 cents. Okay. Again, selling doesn't give us anything, right? So here we have another, 550 and a little tranche coming in here. We have, this is definitely kind of a sweep and selling, but we're only concerned about buying. Do we have any buying activity here? Sweeps, large blocks. We know there's any large blocks. We want to see sweeps. But so right now we're seeing, okay, as we're going through, do we see anything? Another way to do this, we can look at a chart and see, okay, when did it fill? So I could come up here, come up here and say, okay, more info, toss charts right here and say, okay, when did it fill? And Did it fill fast? So we could say, look, there was a buying, there's activity right here. 1,000, another 4,300, 4,000, and about 1,200 right there. That occurred at what? 753 to 756. Let's go back to the trade tab here. Let's go down the bottom. 753 to 756. Okay, so now we're looking right. Keep not giving me the 61. Oh, I forgot I didn't cap at the top. 753 to what? 753 to 756. So come back here. Oh, wow, we're missing data. So, okay, that's why. So we're missing the data here, aren't we? We don't have anything from 753, 754. We've got some 755s in here, and 756. We'll have some down here, right? So we're missing in Thinkorswim this bar and that bar. But I can look at 755 and 756 though. Shoot, I'm way over. Sorry, Blake. I got to bring Blake in here. But the
All
point
good.
being is that we're missing the data here. But again, looking at the chart, seeing the effect on the price, you're seeing what the squeeze right here. So I'm looking at probably 4,300, another 1,000, 5,300 contracts being bought in MO today, and it just kind of a mixture of trade throughout the course of the day from there on. But again, this isn't necessarily a terrible breakout. What are your thoughts on MO, Blake?
Well, I just pulled it up because of what you had there. And both in the long term, monthly, weekly, and in the intraday, all gave you buy signals near 58.80, so 59. So it's all early on in the day gave you buy signals. In fact, you actually got a buy signal. Yeah, about 58.25. So that would have been
and a 7%
this morning in the open, yeah, in the first 15 minutes. Yeah.
Right on.
No, it looks really good.
Well, I'll pass the ball to you, Blake. Thanks for joining me, folks. We'll catch you back tomorrow. Thank you.
All right. Thanks, Brandon. Didn't even ask about my shirt because he didn't like me anymore.
Is that
Bumble.
what is it?
The Bumble, from Rudolph the Red-Nosed Reindeer.
Oh, well, I told you to get some Christmas shirts, right? We need every holiday.
Yeah, there you go.
How that's right. Yeah, I can see it now.
Yeah, him. It's before the terrible elf extracted all of his teeth, but
Island
even
Misfit
still.
Toys.
Yeah. No one wants a Charlie in the box.
Do you got the next 2 weeks laid out? Is that
I just was looking at it today, so
all right.
So the next 8 days, 7 days.
All
All right.
right.
Thanks, Brandon.
See you.
We'll see you. So let me just kind of show you where we're at with Altria really quick. Over